Hello and welcome to State of the Economy. We shot this episode especially in Mumbai to figure out what is happening to private investment. It's been 2 years since this government came to power and they've done a lot to kickstart private investment. The last budget was yet another boost to public investments so that private investment could get crowded in. Then we've had the RBI cut interest rates. The government and the RBI are moving in tandem. After all this, the question being asked is, when will private investment recover? So to have some of our questions answered, we have on our show Mr. Dilip Piramal, the chairman of VIP Industries, the largest luggage maker in Asia and probably the second largest in the world, to understand really what's going on in the consumer market. Welcome to our show, Mr. Dilip Piramal. You are the president of Indian Merchant Chambers. It's the oldest chamber. And in your capacity as the president, you must also be watching the overall economy, how industries are responding to policy coming out from Delhi. So we are here to just understand from you what is happening to the economy, what is happening to private investment. Please give us your view.
I'm quite optimistic about the Indian economy. If you see some basic parameters of our economy, like our GDP has grown successfully every year for the last 5 years.
Yeah.
Our fiscal deficit has been going down every year for the last 5 years. So also our current account deficit, and now in fact just this morning I read that with all the heavy FDI that we are having, we are actually in a slight surplus. With the FDI is more than taking care of our current account deficit. If you see our tax collections, again this morning there was an advertisement from the excise department, from the excise custom service tax department, saying that their collections have increased by 31.5% over that of last year. Now we have 4 main streams of revenue. That is the indirect taxes, that is excise duty, service tax and custom duty, which has grown by 31.5%. Even if you exclude the higher rate of excise duty on petroleum
that's
products.
partly because of petrol.
Even then, even excluding that, the rate of increase is 15%. Is 15%, because service tax is growing very heftily. And same thing with direct taxation. So when I cannot understand how people are saying that the economy is stagnant or it's not growing, when your tax collections are so high, and tax collections are, like excise and customs and service tax is something which you pay every day. The consumer is paying that every day. When the consumer buys something, he pays the indirect tax, and companies
so
like
ours.
ours.
Higher indirect tax growth is a reflection of?
Absolutely, day to day. Every day, because this is real revenue. Sales, you sell it. Even if I produce something and I don't sell it, I don't pay the tax on it.
Sure.
This is actual sales, which the customer is paying for that. I'm not paying it from my pocket. So the final consumer is paying taxes. Then you say, some people saying that profitability is down. But if profitability is down, then why are direct taxes going up?
But what about the top line growth, which is very modest, like 6%?
No, of course not. Top line growth. Then where is the revenue coming from? Where is the excise duty, the sales tax, the custom duties? Where is that coming? All that is coming from top line growth.
There's one data which shows that in 2015-16, the average top line growth of 500 companies, this is from Morgan Stanley, was very close to flat. Close to zero.
No, absolutely no. It's not possible.
Is it possible that the top 500 are
No, not at all. No, of course.
But the companies...
How can you say that? All the automobile companies are the top companies in India. They are all growing by more than 20% last year.
Okay.
That's one of the best years. And automobile is such an important part of any industry of any country.
Okay.
Because the multiplier impact of the automobile industry is... It's the largest industry in most cases. Maybe the textile industry is larger in many countries like India. But automobile must be the second largest industry everywhere. That's growing at 20%.
But I'll tell you, Mr. Piramal, I just interviewed a private equity investor in India who has $6 billion already invested over 7 years. And he was saying that rate of return from India is still in single digit over a longer period. So he was saying unless it really goes up in the next 10 years with better policy, better management of the economy, foreign investors may find it difficult to justify future investments.
On the contrary,
do you buy that?
No, you see, the rate of return for the last 5 years hasn't been good. There is no doubt that the last 5 years have been difficult and that the return on equity hasn't been very good.
Sure.
But if you look at 20 years, the rate of return on equity has been fantastic. And now we are at the end of the
down cycle.
move. We are already moving up. We are on the upward. We are at the beginning of the upward cycle.
How would you respond to RBI Governor Raghuram Rajan's statement that the 7.5% GDP growth of today doesn't seem like the 7.5% GDP growth of say 6-7 years ago when the old GDP series existed, and players on the ground are not experiencing the 7.5 of the earlier times. This he said specifically on TV.
I know he said that. A lot of people are saying that, but I don't know what, I mean, it's very difficult to really go back.
It's a feel that people have.
I'm quite optimistic. In fact, I feel that everybody will be talking another story a year hence.
A year from now.
Yeah, because what has also happened, see, at the end of the UPA regime, it is generally accepted that investment was not happening. There was a sort of paralysis in investment.
Sure.
Like take the coal allocation and all these capital good infrastructure industries had come to a standstill.
There was a bunching of infrastructure investments.
And there was things had come to a standstill. You see, because of all the scams, things had come to a standstill. Now, I'm not against any party or anything, but you have to face the realities. There were, all highway projects and all had virtually stopped.
Which have started moving now.
And, bureaucrats were not working because they were afraid that they will get entangled in some scandal or the other.
Yeah.
Everything had come to a standstill, and you must give credit to the new government that they have disentangled all this pretty fast. Particularly like the coal ministry has been able to clear up the
coal production has gone up also.
And they've given the new allocations and all that's happening. Same thing is what's happening on the roadways, that a lot of the projects have been, which had got stuck, have been untangled, and new investment is happening. And I was again reading this morning about the railways, that a lot of investments are being made, both the budget, I think they'll spend this year 5 times the average of the last 5 years. And there is a lot of expenditure investment which will come, which is not in the budget. Like the entire Bombay-Ahmedabad bullet train is not going to come out of the government funds. Of course, it's probably take 10 years.
Japan,
yes.
Yeah.
So that's not part of the government investment. It's coming for free. In the sense it's coming without any burden on the government. And same thing with the freight corridors. That will be all done outside the budget. So I think all that impact will happen.
Yeah, I agree with what you're saying, that this government has tried its best to unclog or debottleneck many infrastructure investments, heavy investments, which were stuck for various reasons. But there is an apprehension now that because global headwinds have become more pronounced, the way Japan has gone into recession, the way Europe is still doddering, US recovery is off now on. So it's so there is a feeling that this larger climate is also creating a kind of apprehension among domestic entrepreneurs who are not going into new investments with the same confidence as they did perhaps in 2008, 2009, after that crisis. So this is a view which was recently expressed by Uday Kotak also. So what's your sense?
See, fortunately for us, India is not an export-driven economy. India is essentially a domestic-driven economy. It's an economy which is driven by domestic demand. And In fact, there are pros and cons to the headwinds and to the problems happening internationally. The biggest advantage to India is that the prices of crude oil prices have gone down so much. Commodity prices have gone down so much. So that has given us a very good reduction in our consumption prices. Our actual prices of manufacturing, of spending on oil, our expenditure has gone down tremendously. So our cost of manufacture, cost of consumption of all these items has gone down, and relatively the selling prices don't change so much. You know, as we've seen even in petroleum and all that, government has been able to mop up the difference in excise duties and all, which is coming in the revenue of the government.
Which is being spent in infrastructure projects, etc.
So that is the plus point. The only area where I think India is very heavily dependent on exports or on foreign markets is the software industry, and I think we are doing pretty well there. I don't see that there is any downturn. I don't have the actual figures, but I think at the most our the growth has come down, but I don't think even that is the fact. I think even that sector is growing at 20% because the rupee has depreciated in the last 2-3 years. So I think that sector also is growing at 20%, and even if it doesn't grow at 20%, even if it grows at 10%, it's still it's positive growth. Even our overseas remittances haven't really come down. The growth might have come down, but I think in the year 2015, there'll still be a growth over the previous year.
There's one problem.
So let me also add something. You had mentioned about that the private equity players were saying that they're not sure of investing in India, but I think
they're committed to investing, but they're not sure of returns.
But I think that they have no choice. Where else will they invest? I mean, the other countries are absolutely, I won't say in the doldrums, but they're not doing so well. And India is probably one of the best markets. So, in fact, FDI is coming in leaps and bounds.
So, tell me, you're in the consumer market, right? And you're doing very well, and you've also bucked. I'm talking about VIP industry. You bucked the trend in recent years, and you're probably you're in a space, your company where you're doing better than any multinational competitor in your sector. Now, but what is the risk coming from China? I want you to sort of elaborate that, because there is a feeling, economists are saying, that if China is indeed slowing faster than what the Chinese government is letting people know, the public know. If China, for instance, goes down from the current 6.5% to 7% to say 5 or 4.5%, it could severely impact India, because we are in many ways interlinked, and the deflation that China is exporting, especially in commodities. You're right when you say that cheaper commodities is helpful for India, but if commodity prices fall to such an extent in such a precipitate manner, like 80% drop, then it creates a lot of wealth destruction. As you can see in various sectors, all the bank NPAs in the steel sector, 3 lakh crores of steel debt in the bank. So that will take time to play out, right? The advantages that you're suggesting will take some time to materialize. Isn't that so?
You've touched upon so many topics in this one question statement of yours that let me take them segment by segment. First of all, China is not such a big threat to consumer goods industries, because in the consumer goods industries, it is the brand which is more important.
Okay.
So, if it is the brand which sells, and it is not so easy. I mean, unbranded product will not even sell at half the price of the branded products. So, ultimately, it is the value of the brand, and that is in all consumer goods everywhere in the world. So, I don't think that is such a threat from China.
What about intermediate goods?
Intermediate goods, yes. And in fact, there we take the advantage of the lower prices from China. The steel industry is in some difficulty, and I guess, but India also, I mean, has a lot of advantages, and there are ups and downs in every industry. So, I mean, that has to be
But are we taking the advantage of lower price, because we have put up a minimum import price for steel?
Yes, there are so many factors, you know, but
the steel users are not getting cheap steel, right, from China.
No, it is still quite cheap, and then there is domestic competition, so the local prices come down, and one has to sustain a sort of either a low profitability or in some cases even a loss. But that is the essence of business, uncertainty, and there is risk in business, and it is always the marginal players who get more affected. So you also mentioned about the huge loans and all, and that is there. I mean, there have been so many malpractices also, let us face it, especially,
Willful defaults.
yes, and there has been so much of collusion with the public sector banks. I'm
So is
aware
the
of
government
so many
handling
things.
and the RBI handling the loan, the bad debt problem in the right way?
I think so. In fact, at the moment we have very good governance on the fiscal front. There's always some difference of opinion between the finance ministry and the RBI, but I think at the moment the convergence is the greatest I've seen in the last 10 years. And there's always various points of view, but I think universally it's been accepted that we have one of the best central banks in the world.
If you were the RBI governor, how would you deal with the stressed assets, which the Minister of State recently gave a figure of 8 lakh crore as problem assets in the public sector banking sector?
Listen, I am not an economist. I am a businessman.
No, purely from a businessman's perspective.
My forte is, if anything, marketing and general business. I have an understanding of finance, but to say something different from what the RBI, especially this governor, he's so accomplished. And all, whether he's the finance minister of the country, they all are, and they have so many important bureaucrats who are knowledgeable. I think they're doing it quite well. There's always a point of view that whether you can clear up the entire balance sheet in one stroke or whether it should be done gradually. I think there has to be a midway. You cannot
balanced strategy.
Yeah, you cannot just clear up everything. And at the end of the day, it's more of a presentation. The money is already committed. When you're writing off something, the money doesn't come back. It's just accounting entry in the books, and it's a cleaning up of the books. Like the money has been given and it's a bad debt. Yeah. So when you write it off, there is no change in the actual cash position.
Yeah.
It's just a bookkeeping entry.
Yeah.
So in reality, nothing changes.
Yeah.
And in reality, the more important thing is that you don't make such bad advances. You have to be more scrupulous. But I think that is inevitable. The more the public sector engages or expands, the more all this will happen. I think ultimately, as our Prime Minister said, that there should be less government and more governance should be there. Also, there should be less involvement of the government in business activities.
So do you think we should have fewer public sector banks? Maybe just 5 or 6?
Absolutely.
Others should be privatized?
I am totally votary for private sector, and it's not a matter of feeling or liking preference. It's been proven all over the world. Wherever there is a public sector, look at, Air India is the best example. We are spending, today their losses are something like 40,000-50,000 crores they've accumulated. And what is their whole revenues? Hardly, I think the combined revenue of Indian Airlines and Air India is not even 25,000 crores. A new airline like Indigo Airlines, which is just a domestic airline, it has no wide-body aircraft. It is only operating single-aisle aircraft, 6-seater, 6 abreast, A320s. And that, I think, its revenue is something like 40,000 crores in a period of less than 10 years. And Air India is the flag carrier of the country, operating all over the world, right from up to New York, San Francisco, Australia, Japan, and in India. And in India, their domestic market share from 100% in the 80s, 90s, has come down to, I think, less than 20%. It's not even number 4 now. I think there is...
So you think Air India should be privatized?
Absolutely. It's only run for the benefit of the employees and the bureaucrats and the ministers. And with such an active media now, even the bureaucrats and all are not able to take so much advantage.
So tell me, what's your prescription as president of Indian Merchant Chambers? What are 2 or 3 big policy reforms that the government should prioritize and move very fast on?
Well, the number one thing is that the GST has to be introduced, and government is fully committed to that, and it's now a political game. and hopefully it will come into effect, I hope so, within a year. And that will have a big impact because that will really make trading transactions much easier. It will reduce the cost of transactions and it will definitely add to the growth in GDP by at least, it will add to the GDP by at least 1% point. The other thing where I think government needs to take action is on the labor front.
Okay.
Because we have to have an easy exit policy. In fact, I have been saying this. I remember I had a chance
So
to
this
speak.
bankruptcy law, which is coming.
It's not so much the bankruptcy law, that is one aspect, but we cannot close down any factory in India which employs more than 100 people without the permission of the government. And this permission has never been given. I think Rajasthan and Maharashtra have
Rajasthan
now
began with a
raised this figure to 300 people. I don't know whether it's been implemented in Maharashtra or not.
But this is being opposed by BJP's own trade union wing.
Yes, but that is the whole policy. This is an absolute anti-employment policy. I remember in 1982, Mr. Manmohan Singh was the governor of the Reserve Bank. And I had occasion to meet him at a Rotary function. I was president of the Rotary Club that time. And I was having lunch with him and I asked him that, why are you having such anti-employment policies? So he was a bit surprised. Anyway, he was the governor of the Reserve Bank. So I said, sir, I mean, this is not your domain, but as the senior most bureaucrat in the country, he did not, he was surprised. He said, how do you say it's anti-employment? Because I said, this is anti-employment. Because if you make exit policy so difficult...
What you meant was anti-new employment, protecting existing employment.
Yes, but that is anti-employment. Now, how can you just protect? I mean, growth has to come. And that is what has happened, unfortunately.
Tell me, Mr. Piramal, I've been wanting to ask you this question. You are a...
Let me add something to this.
In this context only. Like you're a market leader in India, your VIP industry. You've also bucked the trend in the sense that you've competed with the best in the world in your space. And you also manufacture a lot of your stuff in China. Now, in the context of what you were saying earlier, easy exit policy, ease of doing business, since you work in India and you work in China, can you give me some comparison? What are the advantages which we can bring here, which you have in China?
I used to employ 3,000 people in my factory in Nasik. We made hard luggage. Today, I'm employing only 400 people there. And we have had several voluntary retirement schemes in 1990. And only one factory. We had, I think, totally 4,500 people. But this factory had 3,000 people at its peak.
Now only 400. Today.
Now only 400. Because for one thing, our cost of manufacturing was so high that the whole thing is unviable. I have been losing money in that factory since 1990.
And then compare with...
And then in the year, until the year 2000, we could not import any consumer goods into India. People seem to be forgetting that.
That was a big revolution, yeah.
Up to the year 2000, we had whatever was sold in India, whatever consumer goods were sold in India had to be manufactured in India. So all of us were manufacturing companies. And then under the WTO regime, which we had entered, in a phased out manner, imports of consumer goods were allowed to be imported. At first, the duty was 80%. That was the peak rate of duty at that time. And now it has come down to 10%. So today, virtually everything except, like, say, automobiles are still not allowed to come in at 10%. And that is why we have such a strong automobile industry in India.
So how was that an advantage in China? I mean,
China, the manufacturing is absolutely economical and it's fantastic. And especially, you see, the misfortune for India is that it is all these low-wage goods, the consumer goods.
And how many do you employ in China today?
So we do not employ them directly, but we have factories. But they're so efficient that it's never been... it doesn't make sense for us to have our own factories because they are so efficiently run and they run on such a small margin that if we were to run it on our own, our cost would be a little bit more because then there would be no incentive.
So in the Make in India context, if you were to replicate that in India, you'll need GST, you'll need...
yes, and we'll need better labor policies and it's going to take some time because you see what has happened is that today China has become so efficient in so many industries like luggage. Virtually 95 or 97% of the world's luggage is made in China.
Okay.
And it's made in a few clusters. It's not that it's spread all over China. There are just 4 or 5 clusters where the entire, and there are so many cities in China which concentrate on a few products. Like I'm told that there's one city which makes 90% of the world's neckties and socks. And there's one mold manufacturing center, I'm aware of that, which makes all these molds for the plastic industry. So China has become so efficient in all these industries that it is becoming more and more difficult.
So this is what Make in India
So
should
what is going to, this is going to
replicate,
take
right?
a long time, because you see what's happening in China, there is this 4-to-1 syndrome. I don't know whether you're familiar with that. That if there are 4 grandparents, they have 1 child each. And that 1 child each has 1 child. So in 3 generations, 4 people become 1. And now China has finally changed the policy
that they've
of
changed.
2 children. So it's going to take a time. But they say that in next 10 years, the Chinese population will really, there'll be a scarcity of employment. And their own standards are going up, so the cost of labor will go up. So it's going to take a while for India to now sort of, for this Make in India to succeed, because we have lost a lot of ground.
Sure. So there has been a continuity in reforms, and we hope that reforms continue. Thank you very much, Mr. Dilip Piramal, for talking to us. Appreciate your joining us on Rajya TV. That's all we have in this edition of State of the Economy. We'll be back with you next week. Thanks for watching.